All right, it is time for Trading Nation, a rare treat. I get to do it. Hey. Let's check on the markets. The S&P getting whacked today as President Trump slings the latest salvo in an escalating trade feud with China. So what are the next key levels to watch? Matt Maley is with Miller Tabak. Boris Schlossberg is with BK Asset Management. Matt, how do the technicals look? Which way does this market feel like it's going to move to you? Up to 2,800 or somewhere below where it is now?
Well, at the 2,800, as you mentioned, that's the key level. That's the level we've bumped up against several times in the last 4 or 5 months. And the 2,700 level, which is also the 100-day moving average, is the level we've bounced off several times, at least in the last 2 months. I would say, though, that the 200-day moving average, which isn't much lower than that at 2675, that's kind of the line in the sand. To be honest with you, which way will it go? I'm a little bit more concerned about the downside. If it was only trade, I'd be a little more constructive. But we have a Fed that is being more aggressive and shrinking its balance sheet now that we moved into the third quarter. We've got European bank stocks within a whisker of bear market territory, problems in emerging markets, and global growth is not as strong as it used to be. So I'm a little bit more cautious here.
And Boris, where are you on this? And one thing Matt didn't mention there is corporate earnings, which begin in earnest next week. And I will guarantee you that everybody is going to be picking the nits out of these.
Right. But I actually think that's exactly the problem. Investors are focusing on earnings, which I think is the wrong element here. Because when you look at stock prices, basically 65% of it comes from multiple expansion. And that's due to easing monetary conditions. And right now we're seeing tightening monetary conditions. So I think it's going to take tremendous amount of gains in earnings in order for stocks to go much higher. And that's why I think it's stalling, just like Matt is saying. Basically, if you overlay the balance sheet of all the G3 central banks against the equity market for the last 10 years, what you see is the exact same correlation. Although correlation is not causation, it seems to be a pretty good chart to follow.
Boris, Matt, we leave it there. Thank you very much. And for more market insights, head to our website at tradingnation.cnbc.com and follow us. Follow us on Twitter at Trading Nation.
In rising, low volatility markets, short-term pullbacks can often represent great buying opportunities. But picking exact tops and bottoms is a tricky game. One approach is to consider waiting for the second consecutive up day after a pullback before putting money back into the market.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.